we have DFP Ghana, one of our members, and there's also several other really great industry associations in Ghana and other countries. But one of the things, let me give you a little list, I guess, of things that I think that associations can contribute to achieving this. So, I mean, at a straightforward level, events and networking being one of them. They can be really big events like we've cultivated today with amazing panelists from across the globe. But even a small cocktail drinks or networking, it can be incredibly impactful about building those relationships. So across the industry, very much hearing what others have been said, that these relationships need to be built with other fintechs, with MNOs, microfinance banks, and the regulators, to being able to sort of build out everyone's network and have really easy opportunities for people to get together and have interesting conversations. I think associations have a role also to sort of promote and identify the learning from successful innovation. What has the likes of companies like Jumo done that have really made a difference, and how others can learn from that as well. And I think that's a really important thing. So whether that's again, sort of educational related sessions, case studies, or even having things like awards, which I know also happen in Ghana. It enables those highlights of the success stories to be shared and to inspire others in the industry. We know there's a need for capacity building as well. I mean, maybe when it comes to thinking about things like AI, machine learning, there's so much still to learn about that space. And so capacity building events, whether that be accelerated programs with fintechs, whether it's mentoring, or even things like webinars and papers, all of these things contribute to building the skills and knowledge of the experts and the industry leaders within countries. No one can do it alone. So when you start thinking about what it takes to build a successful fintech, there are other services and that you need. Things like access to cloud computing, legal experts that are going to help you make sure that you're not reaching any kind of regulations or challenges in the country. People to help you with marketing, people to help you find your talent. So I think creating sort of spaces where you can access a whole network of people that are going to be and organisations that are needed to make your fintech successful is really important. And that's what I want to give you an example of Portugal FinTech. They do this really well. They have a physical house where they locate many of the country's fintechs. There's also your cloud computing providers, your consultancy firms, legal marketing, etc. They all sort of house in one place, and there are lots of events, capacity building accelerators, reports that come out of that house and hub. So it's a really great example of what an association can actually achieve to build that ecosystem. Of course, one thing we created, why do we have an alliance of associations? It's to connect you to more than just your own country. Ghana is doing a phenomenal job, and really leading the way on that. But actually, there are others we can learn from as well. Others we can learn from America, in Asia, in Europe. So actually having the association connected to some of the best practices happening around the world helps that learning to be brought into Ghana.
Thank you, Sarah.
To promote that learning outside of Ghana as well, which I think is really important. So that's what I think is the role of the association.
The submission from another speaker, but you are spot on. Life for success is not about one spectacular activity. It's about the little things, the mundane things, the everyday things. And we are all ambassadors of the gospel. We all have stories to share. I was able to transfer 10,000 to South Africa. Share that story. That it is possible. And let's not wait till probably a forum like this for us to say that fintech has come, or it's possible for us to use technology to transfer across borders. Let's be ambassadors of the gospel and share the little stories to encourage that market woman out there to say that your money is safe even if you lose your mobile phone. It starts with you and me. So David, can you tell us how impact investing align with other fintech innovations to drive social and financial inclusion? And what metrics you use to measure success? How can we at the end of today say that we've been successful to reach out to a little more people?
No, thank you so much. I think that for every company, for every investor, what is important is not just the financial return, which is it's a goal that every company pursues, but actually, what are we doing with the end customer? Are we improving their lives? Or are we a burden? Or are we a burden? We see fintech as an excellent way to accelerate financial inclusion. Because with the use of technology, you can really lower the cost of the products. So you can make it more affordable, so more people can use it. On the other hand, you can reach further down into places where traditional models will not reach because it's just too expensive. So that is one of the keys of the integration of this fintech with the financial inclusion. When you talk about metrics on social impact, there are some general metrics that we always look at. Outreach. How many people are using this product? But more importantly, how many of these people did not have access to this product before? For the credit or lending side, there's a concept called new to credit. If a person never took a credit because they were outside of the formal financial sector, either by their personal economic level not being good or because of distance, how many of those people are we bringing into the formal financial sector? That's very key. Then, is the company following the right practices, especially on repayment, on data security? Are we treating the customers right? That's extremely important. Very important. Is this product or company gender inclusive? We have seen many companies that have thrived by focusing on women. And let me tell you, they are much better than male customers most of the time. So that's an important metric that we follow. And then there are very product specifically with agriculture. Are we doing climate adaptation? Are we preparing for the change in climate? And then for insurance, for instance, is how many people are getting basic needs covered by insurance that they did not have before? Again, are we solving everyday problems? That's impact. It's not how much money I'm making. That's good for investors. But impact investors look beyond that and look, are we helping people?
We really need to make impact, not by the successes that we make today, but to think about tomorrow's future. Thank you very much, David. Prof. Dak. Prof. and if you can also come on camera. Yes, thank you very much for joining. So given your expertise in emerging market finance, how can fintech innovations in these markets be leveraged to address broader economic development challenges such as climate change and energy economics?
Okay. Thank you for the question. I'm sorry that I was waiting in the lobby, the Zoom, because I was there. Okay. And first of all, I want to thank Temporary for the invitation, and thanks also to Sharon and the colleague who talked for inspiring sharings. So regarding the question, I think that the fintech is a new revolution that significantly transformed the financial inclusion in emerging markets, like you said, and primarily through the creation of new novel services like mobile phones or digital lending platforms. I think many colleagues have talked about that. Now, for me, the fintech would be very important for emerging markets finance, in the sense that they help channel funds, money into the most productive use, as we say in finance. If people are needing funding to develop businesses, and now they can get access to the funding without very high and expensive cost, given the facilities provided by fintech tools and platforms. Second, we can, based on fintech revolution, develop more entrepreneurial activities. So we will have more entrepreneurs, both male and female entrepreneurs. If we look at the diversity and inclusion to be promoted, so the more we have entrepreneurs, the more we have economic activities. Okay, and then you have the new drivers for economic growth. That's very important for countries, for developing countries, where we need some new drivers for growth. And for me, it is particularly important to promote the roles of female entrepreneurs because they are the precious sources of value creation. I can take a very simple example of Vietnam, where we have something like 20% of companies led by women entrepreneurs today. And it is based on very sound and continuous support from the government policies. Many of those companies are linked directly to fintech platforms, and those companies also get access to some government's financial assistance to develop business from the creation to the operations. What I can add more is in terms of energy economies, of course, we need to move to more actively to the transition to renewables and green sources of energies. And of course, we know that people in countries, less developed countries, have big problems with access to energy. And now I didn't, look precisely on how fintech can help energy economies develop more, but I know that people can get access easily to energy sources based on some consumption and supply analysis, and we know where we can supply energies, and we know where people are needing more energy. Maybe I can stop here for the moment regarding this question.
But Prof, before you go, I would want to ask, what role do academic institutions and research play in shaping the future of fintech? In a minute or two.
Yeah, I know you discussed this question before, but we have several important barriers for the moment to boost the development of fintech and to make them useful for people. Barriers such as limited, digital literacy or financial literacy of the people, and mostly the first users who often hesitate using fintech platforms and facilities. Then we have the question of inadequate infrastructure in many countries, reliable internet connection, and also some availability of smartphones that can be used for fintech applications. Then we also have some regulatory uncertainties and so on and so forth, and trust and security concerns, mostly of first users. So education institutions like engineering schools or business schools have a very significant role in training the new generation about the techniques, about the financial knowledge, so that they can make use of the fintech applications in a more effective way and efficient way for them. And then since education institutions also do research, faculty members are doing research on fintech, so they can provide evidence-based policy recommendations to boost and promote fintech use in the society. and so that people can also learn more, you can understand the best practices, and they can also have um, good knowledge of data privacy or any regulations that they have to go when using fintech platforms. This is what
Thank
I want
you,
to say.
thank you very much. A round of applause for the Professor Duke. Indeed,
Thank you.
academians, we have a role to play as well. It should probably be on our curriculum, financial education and technology. We should learn right from school so that when we graduate out there, we are pros already. Professor Imhotep, we will take a final question and your last words on what roles public and private partnerships play in advancing digital financial inclusion. Do I see him?
Thank you very much. I think this has been a very lovely discussion, because for us to go forward, as you rightly mentioned, we need to work collaboratively. And that includes the private and the public sector joining forces, and not just forces, but resources, knowledge, to share platforms that can make this revolution a very important one in our lives and the spaces we find ourselves. So on the public sector side, I think that regulations are very key to help the new and emerging fintech companies to function very well. So clarity in terms of what type of regulatory frameworks are needed and what kind of environment is really necessary to make these function very well is essential. It's also the case that public sector has a role to play to facilitate in terms of bringing the cost of access to services offered by the fintech institutions lower. Our sister mentioned this in her submission. If you impose taxes on electronic transactions, that already sets a barrier to the ease with which those transactions can go on. And in the era of digitalization, when we have such huge barriers, it also tends to reduce the efficacy of the solutions that are coming through the fintech space. So I think in the public sector policies, we ought to be aware of our ability to create a more conducive environment for the fintech industry to grow. And then the fintech industries themselves also have a lot of learning to do, especially in the emerging economies like us, where it's just at the early stage. Infrastructure bottlenecks are still a very huge problem, as Professor Nguyen mentioned. These are all indications that public-private collaboration can really help to, increase the rate at which we are transacting, but also to generally reduce the boundaries that are, set, if you like, an upper limit to how this industry can grow. So interoperability is an issue that has been talked about over and over again. I think it's something that can be worked collaboratively between the fintech industry and the public sector itself, and then deployment of proper internet connectivity. This can come through some of the regulatory policies. The National Communications Authority, for instance, can reduce some of the barriers that now exist in terms of data cost, and even totally liberalizing that market, because we have quite a few players that are providing this good internet services. And with the upsurge of the low orbiting satellites, it's almost impossible for the regulators to keep these restrictions in place. And I think that as soon as these barriers to accessing newer avenues of connections will really let this industry explode in a way that will be more beneficial. But as it explodes, there need to be safeguards in terms of consumer protection. That may also come through the legal regulatory process. And then with fintechs themselves exercising a lot more oversight in terms of protecting consumers and their data, and also privacy laws that ought to be embedded in their operations. So I think in the main, there is quite a lot that we can discuss in this area. But going forward, it's really about the collaborations that ensures that we maximize the potential of both the fintech companies and the public sector's role in this industry.
Thank you very much. Thank you, Prof. A round of applause. And so, taking from where Prof ended, I will ask you, Jeremy. So how do we balance the rapid expansion with maintaining low default rates and ensuring financial literacy among new users of microcredit services? Talking about security, how secured are we? We are expanding that fast, but how secured are we, and how are we protecting new users in our expansion processes?
Sure, thank you. Can you confirm if you can hear me?
Yeah, I do hear you. Jeremy, you are muted now.
Sorry. So I was saying that, as the previous speaker said, we have to self-regulate as fintechs if we will have to make sure that the security measures that are necessary to protect our customers are at the optimal standard. I think gone are the days where we are constantly depending on an external regulatory policy or regulator to keep us in check. It has now become incumbent on fintechs to be able to make sure that their compliance standards, or our compliance standards, are really up to speed when it comes to protecting the consumer. Because the days of rapidly growing your base without watching your back has shown how it can have detrimental effects on the fintech industry. We went through a phase where there was a lot of funding that was coming into the fintech space, and people were not focusing on the sustainability of the products and services that were being offered. They were focused on acquiring numbers. So if you could onboard 1 million customers in 1 year, it made more sense for an investor to put more money in because it showed traction, as opposed to being able to show sustainable bottom line revenue and customer lifecycle value. I think now we're beginning to see that once you get past that initial, let's call it excitement, the downwards effects are very detrimental, not just to your customer base, but to the fintech industry as a whole. So it has become quite important that fintechs have robust compliance, internal compliance strategies, policies, operational structures that look out for the safety of the customers as we are innovating along. So the one doesn't happen before the other, it happens in tandem, and that's the only way the security and safety of consumers can be assured. So I think as we go forward, we are going to see a lot more of the regulatory technologies implemented as part of the innovative financial inclusion products that we solve, and there's going to be a lot more supervisory technology as this industry becomes more regulated as we grow, as it expands, as it explodes, as was said before. I hope that made sense.
It does. Thank you very much, Jeremy. And that really explains why we put limits.
And whether we like it or not, a huge population still trusts the traditional financial services. You can't take that trust away from them. Trust is earned. It doesn't just come. And you work at earning something. So before the fintechs get there, this collaboration we've been talking about has to be leveraged from. Already, where we find ourselves, our financial technology services are more like an ecosystem sort of. To provide a reliable service, you need to see, on the average, a typical collaboration between a commercial bank, a telco, GIBS, and the regulator. So already there's that relationship there, and that's working. Now, I am happy that recently we've seen regulator take steps to even bring out guidelines and frameworks for the digital asset market. That's a great shift from the initial stance. It's a welcome one. And they even went further to invite stakeholders for us to come with ideas, collaborate, and share on how collectively we can do it. So 10 years from now, it's a marriage of convenience where both the decentralized institutions, the fintechs, and the traditional services will be collaborating and streamlining. We've had previous speakers talk about the need for regulatory impact to be felt. We've seen the need for fintechs itself to own consumer protection. I see that 10 years from now, this will be more streamlined, and together we'll be solving customer needs.
Thank you. Sarah, I'll give you your last word. What lessons can we learn from Africa and Asia? What can we learn to foster the journey, innovation, and driving financial inclusion? In a minute or two, that will be your final comments.
So I think being connected to each other, building our networks, being part of associations, learning and trying to hear from the success stories, the challenges that others have faced, and that is going to be, important for us to continue that culture of learning and collaboration, keeping an open mind to who it may be possible for you to work with, maybe not now, but in the future, who that might be. We can only achieve the greatness that we can working together. If we think about, a lot of fintechs need investment. We need social, we need investment firms. Fintechs need to partner with banks, mobile money network operators. That relationship needs to be there. We also need to think about consumers and, how do we understand what their needs are? Consumer groups can often be really important in telling us some of the challenges that consumers are facing and how we can design that product that meets those needs. And that relationship that we have with the regulator and understanding regulations too is really key. So relationships for me are such a crucial part of understanding where each other is coming from, what we can learn from each other, and how we can actually collaborate together. And collaborate is the key word for the day. I think it's really important. And I think, building our networks, building our relationships, learning from one another is a really key fundamental part that we can do on a day-to-day basis to keep building that innovation in the market.
Thank you very much. We'll keep learning from each other and collaborate to win. Thank you to all my panelists. Audience, thank you. Let's give a round of applause to them. I will conclude by saying that the world is changing very fast. Big will not beat small anymore. It will be the fast beating the slow. The future belongs to those who can rise above technology and master it. It has been my pleasure having you on board, listening both online and in person. To all of you, my panelists, able, specialized in all the topics that we've discussed this morning and going into the afternoon. My name is Dr. Loretta. Thank you for having us.
Oh, keep clapping as they take their seats. Thank you, Dr. Loretta and your panelists. If you just joined us, this is the FinTech for Inclusion Summit 2024 happening at ACT here in Accra, Ghana. And what you just heard was a panel discussion on digital financial inclusion. We looked at the rise of the FinTech revolution, the innovation, inclusion, and the impacts at the forefront. And we've had some very rich insights and conversations. You agree with me, right? Oh, you do agree with me, right? Then a round of applause again for the panel. We had collaboration. We had we would collaborate to compete. We heard about the importance of digital literacy, because as we are churning out the solution, we need to be able to provide the needed education. We've also heard that we can take global trends and localize it. So it's good to learn from what is happening out there, but it is important and better if we can localize that solution to address real life issues facing Ghanaians. So we are moving on to our next panel discussion, and this would be on financial consumer protection. As we are churning out the solution, customers need to know their rights. They need to understand what we are. There's plenty data we take from them. They are giving you their phone numbers, where they stay. In some instances, we are even asked to give you our closest next of kin, and you have a lot of information about the customer. They need to know, how are we protecting that data? What are their rights? If it's a wrong transaction, where do I go to? We'll be going into detail. But before then, we would have a speaker, a 15-minute presentation by a speaker, and after which would invite the panel. So joining us would be Professor John Gachi. He is the Dean, University of Cape Coast Business School, and he will be talking on building trust, safety and security in the digital financial revolution, empowering consumers in a fintech world. Please, a round of applause as we welcome Professor Gachi. Oh, please keep clapping as he takes the stage. Please keep clapping.
Thank you very much. I'm supposed to speak on the topic consumer protection in Islamic microfinance, challenges and solutions. That is the topic I'm supposed to speak on. Well, microfinance is an interesting area. Interesting because it has the advantage of proximity to those who participate in the microfinance activities in terms of savings mobilization, in terms of access to loans to undertake their activities. And again, it helps to provide micro credit or micro capital to businesses to operate. And we also notice that it also helps in piling up debt on microfinance businesses. So it creates burden from the conventional finance point of view. So even though microfinance is very good, the main challenge has to do with the way it piles out debt burden on those who participate in it. I believe we are all aware at a point in time they were actually collecting on weekly basis, maybe sometimes 1% per month, 1% per week, in that order, depending on the microfinance that you are operating with. And with time, people who participated realized that they couldn't be paying the interest that is imposed on them. And they started defaulting, piling up delinquency loans, and that created a lot of problem for the microfinance institution. And by 2019, the Bank of Ghana had to revoke the licenses of about 347 microfinance institutions and about 39 microcredit businesses in the country. And that, in my opinion, created a huge gap for businesses, because these are the institutions that were providing microcredit to micro businesses. And all of a sudden, these institutions are no more. Who is going to cater for them? Who is going to support them? Bear in mind, microfinance do not only give credit, they also provide what we call soft intervention, such as financial literacy education, business support, etc. They provide all these things to their customers. So all of a sudden, all these things were off, creating a big gap for this institution, and that created problem. And of course, we can also trace that to the heightened level of poverty in the country from that period, because microfinance actually is a poverty alleviating tool. When it started in Bangladesh, that was the purpose, and it has actually succeeded in doing that in many countries across the globe. So why are we now talking about Islamic microfinance. Islamic microfinance because it has a peculiar arrangement. Peculiar arrangement because it is based on Islamic Sharia law, which say that when you engage in the microfinance activities, you are not supposed to be paying interest or receiving interest. And the business is going to be structured in such a way that it will resemble partnership, it will share profit and share losses. In other words, it provides opportunities to share the risk in the business. So that seems a better option to people who participate in that space than the conventional microfinance system where a debt will linger at the end of the day. And it's also a means of ensuring financial inclusion. In fact, where we see financial exclusion, we see that it heightens poverty, it heightens difficulty, it heightens lack of business development. So if we have financial inclusion, then it means that we are on the way to resolving some of the problems of poverty and empowerment of people to engage in business. So according to the Islamic Development Bank, microfinance is a key process to achieve financial inclusion, ranging from soft intervention, such as financial literacy, education, and business development support, to hard interventions such as provisions of loans, savings, insurance, and money transfer for entrepreneurs and businesses, and individuals who lack access to traditional banking services. So it's an alternative to the conventional microfinance system. So mainly we discuss this in terms of Islamic countries. But the point is that now we are no more discussing Islamic microfinance in the context of Islamic nation. We are now discussing it in the context of the global economy, because we have seen many countries where Islamic banking, including Islamic microfinance, are thriving. They are non-Muslim countries. So it becomes an alternative financial conduit for people to engage in. And what happens is that you just have to have what we call an Islamic window. That is, even if you have a conventional microfinance system, that microfinance system is allowed to churn out Islamic microfinance products and services, and will continue to run as a conventional financial institution. Or the regulation will allow for the institution to register as a pure microfinance institution that will only churn out microfinance products and services in line with Islamic law. So that is the difference. So now we are not seriously discussing Islamic microfinance in the context of a Muslim nation. Because in the Muslim nations also, because of colonization, etc., in the past, we see those countries. In fact, if you go to Saudi Arabia, they have about 75% Islamic products and services, but they also have conventional products. If you go to some other countries, they have 50-50. So you go to those countries, you see conventional financial system, and you also see Islamic financial system operating side by side. So as I said, it prohibits interest, allows profit and loss sharing, avoid financing prohibited transactions. Some of the things that Islamic microfinance will not finance, conventional microfinance can finance. For example, Islamic microfinance will not finance a business that is into the production of pork, a business that is in the production of alcoholic beverages, but the conventional financial system or microfinance system can provide financial support to those ones. So what we are talking about here is allowing a financial system to allow Islamic financial products and services, and then allow conventional financial products and services, to allow for what we call choice for those who want to participate. In some countries, you see people participating in both, participating in Islamic financial products and also participating in conventional financial products. So it's a sort of complementarity and providing choice. So Islamic microfinance, what does it provide? It provides all the things that conventional microfinance provide, except that it is structured in the way that the participant will operate to share profit and loss, except that it is structured in a way that the participant will not pay interest and will not receive interest. So when you look at Islamic microfinance, we can say that it fosters more entrepreneurship, it ensures financial inclusion, it ensures developmental and social progress, it ensures or it promotes the real economy, because most of the activity, about 80% of the activities of Islamic financial microfinance actually is focused on real sector activities, supporting businesses, supporting entrepreneurship, supporting trade, etc. Those are the things that it focuses on. It does less of consumer financing. That's for you are working, you are a salary earner, you go to the bank or you go to the microfinance and collect loan and spend on your consumption. That is less. What is pronounced is real sector activities. Then it helps in poverty alleviation, as I said earlier on, and then it helps in women empowerment. If we talk about microfinance, studies have shown that about 56% of 1.7 billion unbanked people living in the world, 56% of them are women. And also those who get support from microfinance institutions, majority are women. So when we are talking about microfinance, whether in the context of the conventional financial system or from the Islamic financial system, we are talking about something that relates very well with women. So majority of clients of microfinance institutions are women. Women are mostly excluded from having access to financial services through barriers that are created in accessing opportunities in education and employment outside of the household, acquiring or inheriting asset and land ownership. So these are the challenges of women. So microfinance is there to support women to overcome some of these things. And the understanding is that Islamic microfinance does it better, it does it fairly, it does it in a manner that creates a partnership between the financial institution and those who have businesses or ideas to pursue. So what are the types of institutions that carry out Islamic microfinance? NGOs do that. NGOs in Ghana, we now have a lot of NGOs who are structuring their business activities based on Islamic finance. And in finance, we have either the regulator following activities in the market or the regulator going ahead of activities. In the area of Islamic microfinance, I have believed that activities are going ahead of the regulator. A lot of activities in Muslim-dominated areas in the country are run on Islamic principles. But so long as it's a microfinance, conventional microfinance is regulated by the Bank of Ghana. Therefore, the Bank of Ghana has to move speedily to catch all these people who are engaging in activities that are not regulated. They are doing legitimate business, but those legitimate businesses are required by law to be regulated. So if you are not giving the space for people who are entrepreneurial and are daring, then they will go ahead of you. You are creating problem for those people, because at a point in time when they have problem, they cannot come back to you. That's where consumer protection becomes very important. We need the regulator to protect, to give some protection to those who are operating in the space already. Then we have venture capital firms. So sometimes it's run on the basis of venture capital. We know that venture capital is high-risk capital, but the way they operate, the way they even select those who qualify to access credit or to be supported is one of the ways by which Islamic microfinance operates. In fact, the selection process is tough. They just don't give money to anybody at all to have higher rate of delinquency, etc. So they operate based on venture capital. They operate based on venture capital that provides advantage to us. Venture capital, from the point of view of America, is having two parts. That is the venture capital providing early stage financing, and then private equity providing mature stage financing. When you come to the early stage financing, the idea stage, you see some Islamic microfinance providing early stage capital for businesses to operate. Then credit unions is also deliver on that basis. Rural banks can deliver on that, savings and loan institutions, and then commercial banks, as I said earlier on. Then we also have what we call Zakat Fund. And Zakat Fund has been institutionalized within the Islamic finance system, where institutions which are operating under Islamic finance periodically are under obligation to seed off some part of their profit into the Zakat Fund. Then the Zakat Fund is used to finance activities that alleviate poverty in the communities. Then self-help groups. This one means that group of people who are have enough incomes will come together, put their funds together, then can support people in need in the community, and they share in the profit. So the first level of protection for those who participate in the Islamic microfinance space is regulation. Regulation will support those participate in it. Regulation will support those who are the owners of the institution. Then it fosters transparency, fairness, and ethical treatment are the key things that we see. So when these things are enforced, then they provide protection to those who are participating in the space. Then prohibition of interest and avoidance of speculations are also a means of protecting participants, because to those who believe in the Islamic religion, believe that interest is a burden to those who are called upon to pay or receive. Then speculation allow people to be exposed to risk unnecessarily. So when all these products and services are designed, it's a way of protecting those who are participating in the process. Now I'm talking about fair contract here. And fair contract is very, very important, because the whole thing is structured based on partnership. So joint ventures and the rest, you need to sign agreements, and those agreements should be fair to those who are participating. And when we ensure that the agreements are fair to all the participants, then we are protecting the consumers of these financial products. Then the next level of consumer protection is the supervisory council, who determines the product and services. See, in the Islamic financial system, there is a body beyond the conventional governance structure. There is a body below the conventional governance structure, and that is the supervisory committee or council. And their job is to study, to see that products and services that are churned out by this institution are aligned with the true Islamic meaning of the Islamic law. So, in fact, in the early 70s, I read about a finance minister of Indonesia, and he said that derivative is just like gambling in the financial market. But now, derivative products are structured to reflect Islamic thinking. So now, derivative has been accepted in Islamic finance. Why? Because the structuring reflects Islamic principle. So there should be people who always check whether the product you are bringing is in line with Islamic thinking. So that is very important. In fact, in the past, on the face of it, we don't have Islamic bonds. But today, we have Islamic bond issued in Germany, issued in the UK, issued in the in the North America, Luxembourg, etc. Not only in Islamic countries, including Nigeria and South Africa, because they now structure those bonds in a way that they reflect Islamic thinking. So this is some of the structures, the agreement we see. We have agreement in terms of partnership. We have agreement in terms of sales. Then we have a contract in terms of leasing and agency arrangement. So these are the arrangements that you enter in with the Islamic microfinance and to deliver on the profit and loss basis instead of going to take loan and collect and pay interest. So Islamic microfinance also promises to provide jobs. This is the balance or the weight. This is the number of people who are clamoring to go to university, and these are the jobs that are available. Very few. So we need to be open to new ideas, new innovative ways like fintechs. In addition to fintechs, we need to open our doors for alternative financial products and services to be run side by side with the conventional financial product. So when that happens, we shall have new jobs in Islamic microfinance in the country. We shall have new jobs because we need to train people. In fact, right now, all professional bodies we have, ICA, CIMA, ACCA, and the rest. You cannot charter without doing a course in Islamic banking, which includes Islamic microfinance, Islamic banking itself, and Islamic financial system. So that has been integrated into all our professional bodies. Again, if you go to university, but especially those who are reading finance, you cannot complete a 4-year finance program without studying Islamic banking or Islamic microfinance or Islamic bond, etc. So it's a way of building capacity, but capacity should not be built in vacuum. There must be a place where they will exercise the knowledge that they have actually acquired. So when that happens, we have another conduit of creating jobs for our people. So challenges, first, in most countries, Islamic financial system is not operating. And when you come to Ghana, we don't have a regulation for Islamic financial system. Therefore, we need a regulation. It's a challenge now because we don't have a regulation. So if you're operating Islamic financial institution, you are operating it at the blind side of the law. So we need regulation. So we need to have a consistent oversight. So we also need to ensure that we don't allow unfairness to fester. The other one is information asymmetry. In fact, it's not everybody who understands the principles I've just outlined. For some people, it looks complex to them. So we should make sure that we make information about all the financial products readily available to those who are interested in participating in the process, so that information asymmetry does not exist. Then, ethics. So Islamic microfinance is based on ethical finance. So what they consider to be ethical, they should be allowed to practice it. And what conventional system considered to be okay should be allowed to be practiced under conventional financial system. For example, if you go out in the night, you see a lot of casino around, but that will not be countenanced under Islamic financial system, but it will be countenanced under conventional financial system. So the coexistence is what we are talking about. So my few recommendations that we should develop a comprehensive regulatory framework to allow this to run side by side with conventional microfinance. Then the regulatory body should ensure proper risk management and ethical treatment of customers. Then regular audit and reporting requirement will increase transparency and trust. The thing is that we have audit, accounting and audit standard for Islamic finance. So that will also help in pruning down some of the risky issues that we have talked about earlier on. And that is also another point of new job opportunity for people who will be interested in that, because you need all that. So, in brief, Islamic microfinance removes the burden that is imposed on participants by conventional microfinancial system, and then it helps to create new jobs for our country. And if we allow that to happen, I believe the economy will be open more and more opportunities will be available. Thank you very much.
Thank you very much, Prof. I loved the no interest part. Who heard that part? How many of you loved it like I did? Oh, why are you all pretending like you? I loved that part. But before we move on, so let's just have a conversation. Any question for Prof? Okay, please, there's a...
Okay, I think in the past, the expression has to do with the Bank of Ghana itself does not appreciate it from all the principles, the legal implication, the operations itself. So they have taken time to build their capacity. That's my understanding. So you can't go and regulate something that you don't appreciate. So, but I believe now they have some capacity, and they have had engagement with those who are calling for Islamic banking in the country. So there have been a number of engagements. So now it is no more understanding. The understanding is now there. But how to operationalize it, that is the issue. But I believe we are closer than ever. In the past, nobody would listen to you, but now Bank of Ghana is, in fact, 2 weeks ago, we had a conference on 5th October. 4th October, there was a workshop, and Bank of Ghana people participated in the workshop. So we are inching closer. Yeah.
Please, any more questions for Prof? Yes, please.
Thank you very much. Prof, I just wanted to find out, honestly, this is my first time hearing of Islamic. So when I saw it, I said, is there something like an Islamic, and then we have the conventional. So that's something that I've taken home today. But I just wanted to know why, understand why you want a model that is Islamic and then the conventional. Is there anything, surrounding it? Because I'm just thinking that, okay, the conventional is okay, but why the Islamic? Is there a peculiar reason you want to have that model against the conventional model?
Okay. I think the idea is that the financial system should be open to anything legal and be closed against anything illegal. So, and then again, there should be diversity in financial development. And one of the diversity is to embrace an alternative. The alternative is Islamic banking. In fact, some literature will call it Abrahamic finance because it is in the Bible, it is in Quran. Are you getting the point? So that is it. In fact, the World Bank, which we are aware of, the IMF, which we are aware of, the African Development Bank, that which we know, all these banks have been working together with Islamic Development Bank over the years. It's only the Islamic Development Bank is younger. It's just 50 years ago. Okay? But there is a lot of work that was done between Islamic Development Bank and World Bank and IMF. In fact, on June 19th of 2019, the UNDP and Islamic Development Bank conducted a study, and the conclusion is that Islamic banking provides a better space of managing debt than conventional financial system. So it is not new to those who actually are managing the global financial space. In fact, in the UK, they issued even the first Islamic bond in 2014. And they keep issuing. It was issued somewhere in 2000 or so in Germany, Islamic bond. Yes. So you allow those who want it to participate in it, and you regulate them. That's all. That's all. But again, we are a secular nation. We are a secular nation. Therefore, we are not going to practice Islamic Sharia law. So that is why when I got to that place, I say Supervisory Council. Actually, the name is Sharia Supervisory Board. But if you are doing that in a secular country, you must be sensitive to all the religion. So you open up. So in some countries, what they do is that those who are Islamic scholars and then non-Islamic scholars who are knowledgeable in Islamic finance are put together in the council so that it is not depicting Islam, but it's depicting a governance structure.
Thank you, Prof. We'll take the last question. Wow. Okay, 2 more hands. Then, Prof, it means that the response will have to be very brief so that we can move on. So we'll have 3 people.
This one is not a question. I think it's contributing.
A contribution.
Just wanted to add to what Prof said in response to what my sister asked. So we are talking about financial inclusion and reaching the untapped and the underserved. We have a huge population that, due to religious beliefs, are not adapting to the conventional ones we have. That is the population this one will serve. Okay. So I think it's very apt that it was added to this summit today. It would reach a larger population than hitherto, and we are talking about women who are restricted by certain things from going to the conventional way. So I think it's good. It's good.
All right, thank you. So we take Mavis and then we go to the lady there, and we would be done.
Thank you very much. Indeed, I'm fascinated about the whole program concerning Islamic banking, because most of the times we are not able to bank them and meet their cultural needs. Now, the curiosity is around how are these microfinance breaking even, and making revenues, because we have fees that are waived or slashed or quota paid by the consumers. How are these microfinances breaking even and making revenue? Thank you.
Yeah. So I talk about profit and loss. Is it okay? Yeah. So I talk about profit and loss sharing agreement. So, in fact, some studies show that there is not much difference in terms of profit and loss between the conventional banks and the Islamic bank. But it's just a matter of the approach. So the approach is that that's why I talk about venture capital. So you have a business. So you want some money to do the business. So the bank says that, okay, that's fine. So we are going to enter into agreement with you. We'll provide 20 million for the business. But we will select you to represent us to manage the business. So when we manage the business, we'll compute the money we have given you as equity. So when we manage the business, we get the profit. Then the percentage of the money we gave you will take the profit from the business. That's the principle. That's the principle. That's why I showed partnership agreement. I show lease agreement. I also show sales agreement and the agency agreement. So that is the structure on which it's based. And that is the reason why I said it promotes the real sector more than consumer credit. So it promotes more economic activity rather than consumption.
Hello? Hello,
And
can
again,
you hear me?
Again, we already have partnership law in the country at 152. That guides our partnership agreement. So long as we are doing partnership, it shouldn't be a strange thing at all, adapting. Mm-hmm. Yeah.
Hello, good afternoon.
Afternoon.
It's okay now. Please, can you hear me?
Yeah, I can hear you.
Okay, thank you so much, Prof. I'm Emilia Saki, head e-product sales and distribution, GCB.
Okay.
Okay, so I think earlier I also wanted to find out about, say, the total fees, you know, when you compare Islamic banking to commercial, but I think that you've answered it there. But my other thing that I want to find out is that if you look at it, we are saying that Islamic banking or Islamic microfinance is also one of the angles that are being used for financial inclusion. Can you throw more light on how, you know, if you look at it countrywide, how well do you think this is, you know, it's going on, and how this can be improved? Because she said, it's supposed to actually cater for, you know, that kind of women group, Islamic people that probably will not be able to utilize the commercial. So how is it doing? And then if you have some numbers to buttress this.
Okay.
Thank you.
From a legal point of view, I will assume that we don't have Islamic microfinance, Islamic banking in the country. because all those things are supposed to be regulated, and there is no regulation in place yet. So that's what I said, that whatever people are doing akin to Islamic financial system is just they are doing things on their own. But I do know a lot of people are coming out with products. In fact, somebody is even mobilizing funds, and about 30, I mean, he told me about 30,000 people have registered. So people are doing things outside the law. So that's what happens when the regulation is late to entrepreneurs. So that is the challenge we are facing. So I will not assume that we are having Islamic microfinance in the country, even though in reality some are operating in that line.
Please, a round of applause for Prof. Thank you so much. Thank you. We'll move quickly. We are behind time, so we'll quickly move to the next panel discussion or the panel session. And they are talking about building trust, safety, and security in the digital financial revolution, empowering consumers in a fintech world. And the moderator would be Jenny Radzivolik. Jenny, are you here? Oh, Jenny is online. Hi, Jenny, thank you. So her panelists, I would invite them. Dr. Mark Tampuri, if you are here, please join us on stage. I assume Brian is online, or is Brian here with us in person? Adjoa Paintil. Hi, please a round of applause. Adjoa is also here. Please a round of applause for Adjoa. She joins us on stage. Mr. Emmanuel Lacron, I see him online. Sheila Sanfuma. Oh, please a round of applause for Sheila. And then Saja, I assume she's online. He or she is online. Okay. So this is where I hand over to you, Jenny. Have a good one. Jenny, please, you can unmute. We can hear you. You can unmute and take over the session.
Can hear you.
Okay, perfect. Thank you so much.
I can hear you here, but I'm not sure at the conference they can hear you. That's the challenge. Can you confirm, Mark, somebody confirm over there at the summit?
Hi, Jenny, we can hear you.
Okay, excellent. Then I'll carry on, and please just let me know in case there is an issue. But like I said, I think we've come a long way in terms of financial inclusion, as we've heard today. And much of that is really thanks to the digital financial revolution, as it's been referred to a few times, right? We've got new products, new players, new technologies, and all of that is really redefining how consumers access and interact with financial services. And when we think about that makes us realize that the question of consumer protection and the conversation about consumer protection is more important than ever. And it's really in that spirit that we're looking to use the next hour or so for us to explore some of the critical questions in terms of what are, at this particular junction, the key consumer protection priorities that we're looking to address. What is it that's required to help protect consumers, but even more so to empower them so that they can take full advantage of the benefits that fintech and digital financial services at large bring. With that said, I'm very glad that we've got a fantastic group of experts today with us, both on the ground and virtually. So give me a brief moment to introduce them one by one. I'll start with the ones on the ground. We've got Sheila Senfuma. Sheila is the head of program Digital Finance at Consumer International Uganda. Sheila brings over 14 years of experience in financial services, including in leadership roles in digital finance, consumer protection, banking. She's also a certified financial inclusion policy expert. And with that background, a lot of her work has in fact focused on advancing financial inclusion and the fair treatment of consumers, particularly in underserved communities. We've got Adwoa Ipainsili Eskew. Adwoa is an associate at Robert Smith Law Group in Ghana. She holds a degree in law from the University of Ghana and brings a lot of knowledge in terms of fintech, intellectual property, and commercial law. We've got also on the ground Brian Mzigwa. Brian is a research manager at the Financial Inclusion Program at Innovations for Poverty Action, IPA. Brian has over a decade of experience in orchestrating different kinds of consumer protection research projects, and as part of that, he's partnered with central banks, with regulators in markets like Nigeria, Uganda, and Tanzania, and helped them shape consumer-focused financial policies. Now turning to the virtual side, we've got Dr. Mark Tempore, well known, I think, to a lot of you, but he's the president of the Ghana FinTech Academy Network, and he's really been a leading voice in FinTech research and education across the country and Africa more broadly, and in that role has really been a consumer advocate, and in fact, a lot of his work in his research space has focused on exploring the impact of fintech on financial inclusion. He's also led a number of initiatives recently related to responsible digital lending practices, which ties directly to some of our discussion points later on. And then finally, we've got Emmanuel Akron as well. Emmanuel is the CDO of Cetispay, which is a micro-credit enterprise here in Ghana. Emmanuel brings over 20 years of experience in the financial sector and has been particularly focused on digital financial solutions, and as part of that, pioneered various innovative products that are directly geared at driving forward financial inclusion and ensuring financial well-being for consumers. And then a few final words about myself. I bring over 13 years of experience at the intersection of financial services and public policy. I have served both in roles at regulators as well as in an advisory capacity to regulators. I'm currently the head and founder of my startup Accelerator, which focuses on generative AI and robotics process powered solutions for financial regulatory authorities. So with this introduction, I think we're all set to dive into our discussion. Again, it's a privilege to be here and to have such a group of experts with us. As I've said before, when we think about fintech and consumer protection, it's really important to remind ourselves how much fintech has reshaped consumer protection priorities. And as we're trying to unpack in the course of this panel what this really means in practice, I'd like to kick off our discussion by tapping into our experts in terms of taking a bit of stock and establishing a 360-degree view in terms of where do we stand with respect to consumer protection challenges and priorities. And I'd like to start with Dr. Mark. Dr. Mark, you've, as I said before, you've done a lot of extensive research at the intersection of fintech and consumer protection. What, from your point of view, do you see as, some of the critical priorities that have emerged in this context? And I think more importantly, what are some of the key obstacles that prevent fintech still from realizing its full potential to advance financial inclusion?
Thank you very much, Jenny, for this opportunity. And I believe you can all hear me loud and clear. Yes. So when we look at the advancement in technology and when we situate it within the financial sector, we've seen a remarkable, significant reshape of that sector. And when we are looking at consumer protection and financial consumer protection in that regard, technology is making it more complex. Technology is making consumer protection have quite a number of dynamics. And as technology evolves, okay, we are seeing risks and we are also seeing the opportunities for financial consumers. So both the risks and the opportunities are there. We are seeing also a shifting focus or a shifting priorities in consumer protection. So historically, if we are to go back into 20 years, 30 years from now, what we have been witnessing is consumer protection situated, okay, around, for example, ensuring fair practices, transparency, and even security. Historically, that has been the focus of consumer protection in finance, in the traditional banking sector. But as fintech comes along, as fintech continue to rise, we've had new priorities. And for example, one of them is digital literacy, which I work on. So now we are having many consumers, financial consumers, who are accessing financial services. They are using their mobile phones to do that. They are using digital platforms to do that. Okay, we are now seeing a shift in ensuring that these users understand how to, first of all, even navigate, how to use these services. Okay, these issues has become a concern now. That is the changing priorities in consumer protection, right? We also have issues of even algorithm transparency, where when we have the apps in finance, the app in fintech, we are now questioning the algorithms that are being used. For example, what data does it take? How long does it take for the data to be present within the apps that are being used, right? Now, coming to your second question, because I saw this question was two, yes. Where we are looking at the obstacles that are hindering fintech's potential for financial inclusion. And that is a very key, important question that you asked. I'm very happy we have the regulators here. We have Bank of Ghana here, all right? Representatives here. Because we have been seeing some levels of regulatory fragmentation across Africa and in the world. So we've seen that the regulatory, mostly what happens is that the regulatory environment often struggles to keep pace, okay? Yes, can you hear me? Yes, yes. The regulatory environment often struggles to keep pace with the innovation in fintech. Yes. So when we look, for example, in let's go to the PSD2, the Payment Service Directive 2, all right, in the EU. One issue with it is that when you go to the EU, we seem to have a more uniform regulatory framework. But in our own environment, we've seen these fragmentations that are existing. That is one key issue. Another issue is with the trust and adoption of digital financial services. When you come to, for example, in Ghana, we have communities, okay, that have problems accepting digital payments. They have problems accepting digital payments with the reasons being the mistrust, okay? They are unfamiliar or they have some negative or previous experience with regards to the usage of digital financial services. There are more, which I will come to in my next section. Should you ask me a question, I'll bring it in. Thank you very much, Jenny. Jenny, you are muted. Jenny, you are muted.
Okay, perfect. I'm back on, I think. Excellent. So thank you for that great start, Mark. I think that Dr. Mark, this was a very good initial context. And with that, I now want to turn over to Brian for some additional market perspective. Brian, in your role at IPA, you're obviously working in different markets, and you're kind of getting a first-hand view of what's happening on the ground. When you look at some of the empirical evidence that you've collected in the context of digital financial services adoption and challenges, what can you sort of say or see as the overarching consumer protection challenges, and what maybe some commonalities across markets that you could highlight to us?
Thank you very much, Jenny. So this is my first time in Ghana. I stay in Nigeria. And one of the things that I'm looking forward to doing is comparing the Ghana jollof to the Nigerian jollof. And hopefully I can throw some perspective on that. Jokes aside, even though it's a food joke and I realize we are standing between you and food, please forgive me. So jokes aside, over the last 4 years at Innovations for Poverty Actions, our Consumer Protection Research Initiative, we have deployed several market monitoring tools, including demand-side surveys. Think about analysis of administrative data, doing mystery shopping, and we have found 4 key issues that are common across the markets that we're working in. We work across about 16 markets, some in East Africa, in Nigeria where I'm based, and Bangladesh and the Philippines. And these four challenges that we see relate one to, I want to use an acronym, which is FAT with an I and not an A. So the F stands for fraud, right? So about, on average, if you do an average calculation, about 36% of all the users in these markets that we have interviewed and asked questions have experienced an attempted fraud of sorts. So 36%. 10% of these users have actually lost money because of fraud. Now, fraud leads to lack of trust, which leads to lack of usage. The other challenge that we see, which is with the I that I put in the word FAT, is indebtedness. So with indebtedness, and the speaker previously also talked about it, people are taking on more debt than they're able to service. They're taking on multiple debt and all that. And again, these challenges inhibit their usage. So what we are seeing is, people are making sacrifices. So taking away investments into their own consumption, they're taking away investments into their own future to service these big debts. So a big challenge that we see. The other one that we're seeing is with redress. Now, 70% of users that have experienced a challenge with DFS in the last 12 months in the countries that we are working have actually not, reached out to their providers to formally address these issues. So redress is not being sought formally across these markets. 70% of users are not doing this, and particularly because they do not know, how to reach out to their providers. But the other more appalling one is the fact that they believe that there is nothing that is going to be done that is going to, address the challenges that they're facing. So redress is the other challenge that we see. And then the last one that I'll talk about relates to transparency. We did a study in Nigeria where we scraped prices from 29 different providers. These included mobile banking providers as well as mobile money providers, 29 different providers. And only 2 out of these 29 providers had pricing lists on their websites. Forget about, prices being hidden in all the menus. We had professionals trying to look for these prices throughout all these menus, and we only found them in 2 out of 29. Now, the interesting thing is that you would say to yourself that if you don't get the price on the website, what would you do? You would say you reach out to them via their customer-facing channels, and we did that. We reached out to them, via social media. We called them up, and what was very interesting was the fact that the information that you would get from these places was likely to be very inconsistent. So when you call up, you get a different figure from what you will get when you try to text someone via WhatsApp or Facebook or Twitter at the time, right? So these are the key challenges that we are seeing, and overall they undermine consumer trust in DFS and all the efforts that we are making, and will definitely lead to reduced usage, as we have seen in some of the markets that we are working. Thank you, Jenny.
Thank you, Brian. I think this added additional interesting insights from Mark's perspective, and without I now want to turn over to Sheila and sort of add another layer to this discussion. Again, Sheila, you as part of Consumer Internationals, you work directly with consumers, or at least have the ability to access consumer feedback, particularly in low and middle income countries. Again, building on what the perspectives that both Mark and Brian have already shared, what are your perspectives on some of the most persistent consumer risks, and particularly those that affect the most vulnerable consumers? And building off of that, again, where would you say are, from a regulatory perspective, the most pressing gaps at this point in time?
Yeah, thank you, Jenny. I think consistent to what Dr. Mark and Brian have said, I think when it comes to consumer risks, unlike the battle for jollof rice, there is some consistency across borders. We've done research with our membership in over 100 countries, and over 74% do mention the same risks around frauds, around transparency, particularly around clear pricing data, similar to what Brian has said, but also around complex terms and conditions, whereby the consumers are not particularly clear on what's expected of them, but also usually the terms and conditions are very abstract or put in fonts that are very small. So you go, for example, to sign an insurance contract or a mortgage contract, and the important things are like 50 pages in the tiniest font, whereby when you use a big magnifying glass, you won't be able to read them. So usually, because you want money, the consumer will just be quick to sign, and no one will be able to explain exactly what are those critical terms that are being signed to. One time I was signing a mortgage contract, and for once I read everything because I had a lot of time to wait, and there was a clause where the bank had the liberty to increase the rates without informing me. Like they were free within the course of the contract to increase the interest rate. And those are things we were signing to. I did take the loan because I needed the mortgage, but we don't always read those things. And for some consumers, that could be a deal breaker. They would say that, let me go to a place where the rate is fixed, where I know what's coming, where at least I get to negotiate. So in terms of the risks, we're seeing the same risks over and over, but they're also coming up in different ways. For example, we're seeing a lot of risks coming up in the form of deep fakes, whereby someone will call you using a voice that you already know to try and sell you something or to try and get you to send them money. So it's something around generative AI. What are the risks coming out of that? It's around new innovations like crypto being misused, where some are using them for Ponzi schemes, even though some could be legitimate. So we are seeing an evolution of risks, but in terms of the core risk factor around frauds, around transparency, around misuse of data, around vulnerability groups, whereby we've seen that vulnerable groups or more vulnerable populations have a difficult time accessing digital finance information, especially around risks, compared to those who are not so vulnerable. So we're seeing a whole lot of new risks coming up, and also a lot of weaknesses in terms of the regulations that are in place. When you look at most countries in Asia, looking at Indonesia, Thailand, Philippines, in Africa looking at Nigeria, Uganda, Kenya, and in Latin America, particularly Mexico and Colombia, we're seeing a rise of digital lending apps. And with these, we realize that even when the consumer is having issues, or when they're communicating, they'll say, oh, this is the interest you're getting. In the end, they'll say, oh, it was supposed to be this according to the terms and conditions that you couldn't access. And when you go to get redress, no one is mandated to give you that redress. You go to the police, they'll say, not our problem. You go to the central bank, they'll say, oh, those are not regulated under the central bank. You go to the ICT ministry, they'll say the same thing. So even when you try to get redress or to complain or to try and find justice, you can't, because there are loopholes in the regulation that the providers are taking advantage of. I liked the example that the CEO of Let's Say Go shared, because there are actual businesses that are providing credit or solutions for vulnerable consumers and all consumers, but they're not as ruthless as those who are being fraudulent. You'll find that at any minute, any app you open, someone is trying to give you credit, cheap, fast credit. But you find that when you go to the traditional banks or to the microfinance, they're not as ruthless in terms of how they advertise, even though they have products that could be useful for consumers and less hazardous. So I feel like we need a lot to do around outreach to consumers in terms of awareness of both the risks that are in place with the new products, but also what's good that they could actually use as a fallback position, because they'll still need the money. But then also trying to work with regulators collaboratively, I know that has been said over and over, to see in instances where there is no clear regulation, what happens then to the consumer? Who do they go to? How do we work around temporary measures to ensure that consumers are still protected? So I'll pause there for now, and back to you, Jenny.
Thank you so much, Sheila. I think it's clear from the three contributions. We have a lot of complexity to deal with. I think that the themes of trust, transparency, and fraud, they're setting a very good basis for our first deep dive, which is about digital lending. So again, digital lending is an excellent example, because on the one hand, it's really expanded the access to credit, but there remain, as has already been sort of highlighted by Sheila now, there remain sort of a number of critical challenges in relation to some of these themes, including predatory lending practices, inability or lack of transparencies related to fees, etc., etc. On top of that, there are other, various demand-side barriers that we see that still pose a constraint to accessibility to digital lending products. So again, as we kind of explore the topic of digital lending in greater detail, I want to turn back to Mark, to Dr. Mark. Dr. Mark, you have recently played a very critical role in addressing some of these harmful practices that I mentioned, including, in relation to aggressive debt collection. Can you share a little bit your experience around that and some of the lessons learned? And, in light of that, also, articulate where do you again see the priorities in terms of what has to change to overcome some of these issues that pose risk and problems to consumers?
Okay, so thank you very much once again, Jenny. So reflecting on my most recent research, which I had to do within the financial space, on a specific company, it has really taught me valuable lessons, very important lessons about the importance of consumer protection and the importance of addressing predatory lending practices whilst also promoting consumer protection, especially in the digital lending sector. So my most recent research was within the digital lending space. We interviewed a lot of people on issues regarding aggressive debt collection practices that has a significant impact, on financial inclusion. And key lessons that I learned from that research, which is very, very new, right? And for which I saw the successes this year, is how relevant or important consumer protection is in promoting financial inclusion. So my research into this firm had to do with complaints of serious disclosure issues, interest rates that weren't disclosed in full. So you take a loan of 40%, 30% interest rate, and at the end of the payment of that loan, you are spending up to 40 to 45% on interest because it wasn't fully disclosed. So yes, consumer protection is very essential. That is one key lesson that I got, especially to the vulnerable groups. In fact, regulatory oversight, and I happen to always not leave the regulators out of our researches. Because the role that regulatory oversight play, okay, is to serve as the one who is looking over to finding the solutions, the one who is looking over to safeguarding the interest of the market, I mean the financial market. So I work with the Financial Stability Department of the Bank of Ghana to show them the research that we have done in the digital lending space, and we all agree, without proper oversight by the regulator, we tend to lose the innovation in our digital lending practices. And this can also be misused and harm the consumers, okay? Another key issue, which had to do with the ethical lending practices. Ethical lending practices, we would all agree from the researches that we have seen, and even those that I have done, could lead to sustainable success, especially for small and micro, medium enterprises. So, in fact, what we achieved with this particular research that I led was for the Bank of Ghana, who is providing the oversight responsibility or oversight over the banking sector or the financial sector, which include the lending sector, had to come in and force a company to reverse, for example, their house-to-house debt collection exercises. So this company has to collect their debt if you default or if there is a delinquency in the loan. These we saw were unethical, and we sent them to the Bank of Ghana. We had a meeting, and the company had to stop them because the Bank of Ghana came in. So these are the lessons that I've learned, that industry, okay, business sector, and academia, when we come together, we are able to promote, through our research, to promote the transparency that we want, the trust that we want, through our research that we do. Now, going forward, what we are looking at in terms of the research is, first and foremost, very important. And in my earlier submission, I did mention that digital literacy is now becoming a new priority area in financial consumer protection. So going forward, key issues that goes to promote financial inclusion and consumer protection is in my literacy program, which is also making impact. Another area that my research really was, how do we get an improved credit score substitution will not just take advantage of, but when we have a fairer credit scoring method, okay, that consider a wide range of factors, to determine whether someone qualifies to even take a loan, what we would see, okay, is that it will now allow more consumers to have access to financial services from financial institutions, and therefore limiting their exposure to these predatory lending practices that are offered by financial institutions who sees them as easy targets. Of course, stricter regulations. One issue when we are talking about regulations is always going in for innovative regulations. So even though we want regulations to be strict, we also want them to be innovative. My experience with this research that we just concluded had gone to show that regulatory framework, okay, needs to be regularly updated. When we have a regulatory framework that is strict, okay, on the bad lending practices, when we have a regulatory framework that does not consonant and provide for harsher penalties for violations, this can help deter predatory lending practices. And of course, we always say moral persuasion, right? Yes, we must encourage industry self-regulations. So this firm that we worked on, all right, after we presented our research findings to them, yes, we had to go to the central bank without findings because it became an issue of they not seeing our point of view without research. But when we have, or when we encourage self or industry self-regulations, the company, for example, that we worked on this year, probably would adopt a self-regulatory code of conduct, which they will pursue. And this would encourage businesses. It will encourage these financial institutions to hold themselves accountable so that it promotes responsible lending. So based on the research that we just concluded, these are the steps that I think could help address the ongoing issues at our research. Thank you very much, Jane.
Thank you again, Dr. Mark. And I think, again, you touched on a number of important topics, including the role of regulators, and I think the importance as well of having enabling regulations in place. And that brings me to my next point, for which I'd like to turn to Adwoa. When we think about digital lending, then obviously the role of AML regulation is an important one to ensure the system can't be exploited. But at the same time, sometimes AML regulation can also be, restrictive and limit individuals from accessing these products. So I'd like to really get your sort of legal perspective in terms of where you, in a Ghanaian context, see the current impact of the AML regulations on consumers and on financial inclusion in a digital lending context.
Hello. Okay, I believe this mic is working. Thank you for the opportunity, Jenny. So when it comes, firstly, I would like to say that outside of AML provisions, this is just a side note. Unfortunately, Ghana doesn't have much laws on consumer protection when it comes to consumer protection as a topic in general. I think the very few instances that it is mentioned are in the Electronic Services Transactions Act and in the Payment Systems Act. So at least for fintech, there is some form of thought that goes into consumer protection. But for AML, so AML short for anti-money laundering, usually the regulation that's in place, we have a new act, which is the AML Act 2020, which repealed the old act, and it's fairly detailed. It gives Bank of Ghana, obviously, regulatory insight, and it gives them the opportunity to regulate other financial sectors that are not typically banking sectors. So you have the Securities Exchange Commission. You'd have, in this case, fintech startups, which even though are bank, which take deposits or deal with cash, are not traditional modes of banking. You have the mobile money or telecom operators, which are all by law now expected to have anti-money laundering policies. And these policies are also required under the current Data Protection Act. So if you are as long as you're processing data, and in this case, since you're talking about fintech companies, you'll be processing a lot of data. You'll be processing biometric data, you'll be processing the basic markers or the basic identity data, their date of birth, you'll be processing their card information, their banking information. In some instances, their national identity cards. In some instances, you are going as far as their social security numbers and all that. You are required now to have anti-money laundering policies in place. The issue is with enforcement, and as has been said by Prof. Gatti, and I believe also by Professor Mark, that the issue of enforcement is really what is ailing Ghana as a country, because we have all these beautiful laws in place, but when it comes to enforcing these laws, it can be a bit difficult because, one, there is not enough literacy on it. For instance, there are laws that state, if you look at the Data Protection Act and you look at the Electronic Transactions Act, it states that if you are given loans out, they must be transparent. You must state the mode of payment. If you look at the Borrowers and Lenders Act 2020, you must state the mode of payment. If there are securities on it, you must state how these securities will be registered. When they are registered, you have to go to the collateral registry, open an account, register it. But a lot of people seem to be oblivious to these little, not so little actually, markers or requirements that they have to fulfill. And part of the reason, I believe, is because Bank of Ghana introduces these policies in what we would call legalese and not in everyday language. I would like to ask if any of us have seen a Bank of Ghana notice before. Yes. It is very, if you're not a lawyer or you're not somebody within the space, you cannot understand it. You would have 3 paragraphs, and the aim of the paragraphs is just to say, do not bank with this institution. Or you would have a whole Bank of Ghana notice, and they'll say, we as Bank of Ghana have reached this decision at this meeting. And there's a lot of technical terms that are being used. And sometimes, even for professionals, it takes a while to understand these terms. And these things get in the way of effectively implementing our AML policies. And so sometimes you have bankers or traditional institutions not knowing how to communicate this to their clients. And I believe it would be the same even with the non-traditional modes of banking, with fintech startups. How do you communicate these requirements to your clients? One of the latest ones, which I believe Bank of Ghana did well, was the use of Ghana cards for registration. As long as it is a financial service that you are signing up for, you need to provide your Ghana card or your national identity card, for lack of a better word, to register. But the issue we are facing now is Bank of Ghana released a notice that required us to physically present these cards. But the language of it made it very unfriendly for day-to-day users. So unless you go to a banking hall, or unless your fintech startup is proactive and able to break it down, as the consumer, you are lost as to what the procedure is, because you have no idea what the notice is saying, and Bank of Ghana is not making any additional effort to make sure that it is accessible. Part of AML, one of the things about AML policies is that it must be accessible to all and sundry. So if it's not accessible even to the learned or to the elite, then you have to think about the minority. You have to think about the illiterate or the semi-literate. You have to think about the market woman who is just exchanging cash. How is she going to understand these policies, especially when her first language is not English? And this is one challenge, accessibility in languages. Then we also have, I believe one of the processes that Bank of Ghana tried to resolve this was with the eSwitch card, which was supposed to be accessible, but it failed, unfortunately. Remnants of it live on and have been incorporated into other sectors, into our mobile money, into the use of biometrics for fintechs and financial transactions. But the program itself, the eSwitch program itself, unfortunately doesn't seem to be doing well, because that reached more people, and that was more useful in rural areas where they didn't have traditional banks. You could, as long as you had the system, you had the POS with you, you could transact anywhere in Ghana. Unfortunately, we seem to have calmed down a little on that. Now, also, when it comes to anti-money laundering, one good thing now is that Ghana is slowly recognizing that fintech goes beyond just traditional banking. We are looking at games of chance, where you're playing games online for cash. All these are forms of fintech, because money is changing hands, even though it is not physical or transactional per se. And so now our Anti-Money Laundering Act includes games of chance, well, other than lotteries. I believe that in due time we should be able to include lotteries, because we are getting to a point where lotteries are no longer physical raffles or physical coupons or tickets that you buy. You are able to go with a click or just a USSD and say, okay, I want to access this lottery. So I believe that that is something the regulators should be able to look forward to. I would pause here for Jenny, if you have anything that I haven't addressed.
No, I think, Edward, that's a good summary for the time being. And in the interest of time, I'll move on. I think we've heard now the research perspective, we've heard sort of your legal perspective. Thank you again for that. So I want to turn to Emmanuel to get sort of the market perspective when it comes to digital lending. And, you know, you're obviously working directly through ZSP with consumers. What do you still see as sort of key issues in consumers trying to access your products, and how, you know, at ZSP are you trying to address these issues and improve accessibility?
Thank you so much, Jenny, and thank you for the organizers of these events and the previous presenters. Great work done by Mark. I heard everything you said, and I'm not going to repeat some of what you said. Jenny, in respect of your question, which is the challenges people face in accessing digital lending, and also what we are doing at CitiPay. To get to that answer, let me quickly give you a brief something about CitiPay, which will then dovetail into the solution. So CitiPay mission is to make financial access, choice and control a reality for millions across the globe. I mean, we started here in Ghana and currently licensed to only provide the service in Accra. We are propelled by two engines, which is our purpose and values. Our purpose to connect people to what is financially important in their lives. Which starting with loans and helping them with good financial habits. On top of this, purpose is what drives us, is the fuel, is our values. First on it is, financial services require trust, so we have integrity to be number one, value driven here. Okay, so that's a brief about us. We are licensed by Bank of Ghana. Monday, all those who read the daily papers would have seen the microcredit in good standing on page 34 of the daily graphic, and you would have seen CitiPay as number 55. We are also registered with the Ghana Data Protection Agency, and we've gone beyond that, and we are ISO 27001 certified as well as a microcredit, which you hardly will find anybody of our size have it. Having understood a little bit about us, and let me quickly talk about our digital lending process. So sometimes people get confused about what digital lending is, and I think for us, again, to make it financial solution accessible, we've started with only website, okay, for now. And so a customer can go to our website, and then you apply in there, and then instantly our system will then afford you a score, and then whether you fall within the acceptable score or not, then you are either accepted or rejected. Okay, if you are accepted, it goes through the next stages of checking that our AI did the right thing and didn't bias you and all those kind of stuff. Even if you are rejected, we go through that extent of checking. And if you are also qualified for the loan, we give you a call. Aside the fact that you consented to our legal terms on our website, we will give you a call to educate you about the legal terms, okay? What are you signing to? In terms of, the rates. We are very transparent about all the fees, even on our website. Before you sign up, the fees is all disclosed. And I'm happy Monday, Bank of Ghana published all the fees by all the banks. If you go to their website, you see it. And again, what is very important is to let customers know that it's not only the interest rate, but their fees are tied to it all. And so we get them to understand that. And after that process and making sure that they understand it, we then go ahead, we give them the onboarding kits for them to understand what we're getting on. And then we sign up them for the loan. And then, even when they default, we also have a process in place, which is more consumer driven. We find out why you defaulted, and we find a way to restructure the loan where possible. And then we go through our series, and the last stage probably, is probably a core process, but we try to avoid that as much as possible. To your question about this obstacle customer face in assessing digital product. To start with, CDPay started in 2021. For us to start CDPay, because of the mission and because we want to be customer-centric, we conducted a research, okay, in Accra and Kumasi, understand why some people don't have, are not taking loans or even don't have a bank account. Because we wanted to, purpose, again, as said, is to tap into the underserved market. So we got to understand that. Okay, so that's our first point I'm going to use to give you the answers to the question of the obstacle. Second, also, when a customer successfully apply for a loan, we call the customer, get the customer's feedback. How did you do? What could we improve upon? And on a quarterly basis, we do a full customer survey of 100 people, and also annual basis as well. And we fine-tuned it, our processes and all of that. So we have a good idea of what, make people not access financial solutions. First, it's limited financial literacy, the first obstacle. People don't understand, the interest rate. And again, they don't know that beyond interest rate, there's something more to it, which is the fees. And aside the fees, some of the loan products have even insurance premium to it. Aside that, there are agents in the process, which they also collect fees. So that's, many people don't understand that, okay? So that is a big piece, okay? And so that level of literacy, I think is one of the biggest, okay? And as we go through this, summit, or the other panel questions, I'll get into details here. The other thing is that there's a restricted digital access, okay? Not everyone has a smartphone, though I think we've gone a long way in that area. Internet access is also not stable in most cases for some people, and also digital literacy. So the third is trust and security concerns, okay? As Mark research, he was pointing out all this aggressive way of collection. People have that trust issues with financial services. So I think, when you want to sell them any loan products, they are concerned about it. Moreover, because some of your data is also going to be used when you default, like, in terms of your relatives and all that, people are concerned. Why? Because all your, the people you've been calling are on your mobile money statement and your bank statement. And so when you default, it can be reached out to. People are concerned whether they want their family, even their employers to know they are. So these are the three big buckets, of what is, the challenges. Now, to the second part of your question, which is, what is CDPay doing to address these challenges? I've already said some of the solution already, but let me quickly summarize it. The first is the product literacy. Okay, as I mentioned earlier, when you sign up for CDPay product, you're successful. We go through, we take the time to explain every detail of your of the legal terms and also your contract. So that's, I think, is the first thing we do. Then we also have other tools, okay, on our website. So I think Mark and other of you will attest. If you go to our website, we have a number of tools to help you. We have what we call the budget app, where we provide you enough information to understand financial literacy and so many ways you can do to take control over your finances. Okay. Aside that, we are very, very active on social media, on all the channels. Every day we have a weekly, daily kind of things that we send to customers. And we also have monthly teams. So this month is about wealth creation, and daily we have Monday what we send, Tuesday, everything. So customers are well aware of it. We show all the details we have nothing to hide. All our decisions, and that's one of our key value proposition is that we are complete transparent. So you go to the social media, you get it there. And also, as touched on before, we also address this concern by being Ghana data protection 27001 by external auditors globally to make sure that our way of hosting customers' data, we are using it for the rightful purpose. And again, we're making sure we're doing the right thing. So this is what we do as CDPay to address some of these concerns and to make sure that customers are working with the right products. And again, as I said, integrity is the first part of our value. So we live by that. Thank you, Jenny.
Thank you so much, Emmanuel. As a quick intervention, I was asked to wrap up our panel in 15 minutes so everyone can go for lunch break. So with that, I'll improvise a little bit as we move forward, but I want to try to get through about 3 to 4 more questions. I think one of the topics, having talked about the challenges, especially around transparency and complexity of products, that I don't want to miss out on is a quick deep dive on the new products such as buy now, pay later, as well as digital assets. Again, both have enormous potential in terms of enabling financial inclusion, but do come with all sorts of risks and challenges. So I want to go back briefly to Sheila, because Consumers International has, prioritized or very closely looked at BNPL, and perhaps you can sort of share some perspectives in terms of where do you see, the benefits of these type of products, but also the associated risk and some of the priority actions that need to be taken to address those.
Yeah, thank you, Jenny. I think I'll start off with mainly buy now, pay later. I think for most of the consumers, especially following a higher cost of living, given all the wars that have been going on, but also after COVID and everything else, it's been critical for consumers to be able to access products and services at a very affordable rate. And products like buy now, pay later have been very instrumental, particularly around inclusion, around speed, and around getting consumers to access things they couldn't have access to before quite quickly. So in terms of financial inclusion, that has been good. But we also see that, like I did say in the first place, some of these products are not regulated and someone is always ready to take advantage. And we're seeing that with more buy now, pay later products, more providers are coming out to still take advantage of consumers, whether it's still around terms and conditions where you just have a button to click without any terms to read. So they're abstract in someone's head, but also trying to see targeting that's unsolicited and targeting minors like children, like people that they know are already in hardship based on the information that they have. So to prevent some of these, we did we launched a call of proposals to regulators, particularly to regulate buy now, pay later products the same way they regulate other credit products, because it's really a credit product. And that includes putting caps on fees and interest rates, putting a prohibition on unsolicited adverts, providing the same levels of protection for those unable to pay in countries where the national laws around bankruptcy and etc. to use the same rules across all the digital credit products. But we're also trying to see how do we get consumers to understand what the terms and conditions are around that. How do we get the regulators to implement mechanisms that can actually track the impact of these products on consumer outcomes? That includes usually publishing the data of those who are in arrears, trying to publish data for late payments to be able to understand whether these are actually serving the purpose for which they were put in place. Another key one on that has been mainly around trying to understand, to push for most of the providers to give options for full payment instead of immediately offering to give buy now, pay later products. When you're trying to check out for most of the online platforms nowadays, for most of the countries, you'll find that there are about 5 different people offering you to pay in installments. But at the moment, it all seems like a good deal, but they won't tell you all the other implications around it that may harm you later. So we're pushing for regulators to mandate mandate full payment of products as much as possible, instead of usually fronting all the different ways you can have buy now, pay later products. And then quickly around AI, really the biggest one is around analysis of information that is fed into the algorithms, whether it's for generative AI or simple AI for task management, trying to ensure that there is a clarity in terms of the data used so that it's not biased against or towards certain groups, but also coming up with international frameworks that other different regulators can be able to leverage in setting up AI protocols one of the themes for this session is bridging borders or something around that. And global frameworks around most of the new products are really, really critical. Usually the OSB countries that are ahead in terms of regulations, in terms of policies, and if we have something overarching, then different countries, as they come on board, can use that as a framework to customize for their countries. So I'll pause there for now, but really the big one is really ensuring we have clarity in terms of how the new products are affecting consumer outcomes, whether they're leading them into over-indebtedness, whether they're excluding consumers, whether they're designed for purpose. But the other one is really having key frameworks that are overarching, that can be leveraged internationally across borders to benefit consumers. Thanks, Jenny.
Thank you, Sheila. And I think the point around, again, regulatory framework also very much applies to digital assets. And for that, I want to come back to Edouard briefly. We're now seeing in Ghana sort of, new initiatives, including, a new sandbox was launched earlier this year by the Bank of Ghana. We've seen, proposed guidelines for digital assets that would mandate that they are licensed and subject them to certain requirements, risk management, governance, etc. Again, from your legal perspective, where or how do you view the effectiveness of some of these initiatives, and what's really, what are some of the key regulatory gaps at this point that need to be addressed in order for digital assets to, become effective and from a consumer perspective?
Okay, thank you, Jenny. So the regulatory sandbox was launched, I think, about a year or two ago. It's very recent for Ghana. But one of the things that I would laud it for is that it looks at fintech beyond what we usually know in Ghana. In Ghana, when people say fintech, they're looking at the fintech companies. They're looking at ExpressPay, ZPay, CDPay. They're looking at pays, basically, payment systems and transactions. They're not really looking at other forms of fintech. But what the regulatory sandbox does is that it says, okay, we have all these payment systems startups and companies and other fintech companies, but we also have other forms of fintech that will not necessarily come within the same scope, such as cryptocurrency in some regard. If you're buying Dogecoin or the other coins, I keep forgetting the names, but you do not necessarily have regulatory oversight for that. But what the regulatory sandbox does is that it says, okay, bring all these other products and come to Bank of Ghana. Let us have a discussion. Let us see how we can test it within the market and then use it within the country, because as part of the government's agenda, they want to move into a digital or into a cashless society. Now, the other one, there's one issue that I have with the regulatory sandbox is that one of the models is called the cohort model, where Bank of Ghana in themselves brings out these subject areas for fintech. The issue with that for me is that if it's coming from Bank of Ghana might not be as innovative. Let me explain what I mean. Professor Gassi made a statement that when it comes to regulation, and there's a saying in law that law follows development. So whatever happens, anytime there's regulation that has to be done, the development has to exist for the law to follow. Now, when it comes to Bank of Ghana bringing out these subject areas, the worry is that is Bank of Ghana going to wait for these developments to exist before the law follows or before the supervisory oversight follows? Because again, if it's about regulating the space, then it has to exist for a comparative number of years before they can say, okay, this has stability or this has been effectively established within our domain, so we are going to regulate it. But then what happens in the meantime when everything is a gray area or is in some form of loophole? So that is the one problem I would say I have, and I'm hoping that Bank of Ghana is able to work with other stakeholders to bridge that gap and make sure that at every point in time, at the commencement of whatever development or whatever fintech product, Bank of Ghana is there and able to provide some form of help or some form of assistance, or at least is building some form of capacity so that the regulatory aspect doesn't come too far after the product or the system has been launched in the country. And then you also have, which they attempt to do by saying that, well, then you can bring us your innovations. But the issue with that is there's a lot of red tape that is involved with Bank of Ghana. And sometimes this red tape is hard to access and not very friendly. So we would entreat the regulators to make it accessible, because if you're looking for information, sometimes it is hard to find it online, particularly within the Ghanaian context. You'd be amazed at how hard it can be to even find basic laws or basic contact centers. I believe, who was it who talked about FEDS? I'm trying to remember this. One of the speakers before me spoke that, Brian, actually, it was you, spoke about the issue of redress and how across countries it is a problem because people are not seeing where to go. And that issue is still not addressed within our sandbox, because the issue is, where do we go? What is the redress? Apart from the Financial Intelligence Center, which is just recently established, are there any other channels? What are the and if you are going there, what are the procedures? All these need to be published and need to be transparent, because you are dealing with a large group of people who live outside of Accra. So what happens if somebody needs information and the person, it's not even within their jurisdiction? How easily accessible would this information be to the person? And I believe that the process or the procedure or the means for redress should also be detailed and be transparent. It's another issue with the sandbox that can be addressed. Because we are running out of time, I'll just say the last issue would be that the regulatory sandbox, even though it's a laudable attempt to include all other fintech products, could also do with a smooth, exit plan. So what the regulatory sandbox does now is that it's helping fintech companies. We are waiving all these requirements for you so that you can test out your products. But there is no real guideline or framework to ease these companies after the testing period. It's okay, after the testing period, then all other requirements are applicable. You have to pay your minimum capital requirements. You have to meet these policies. But there is no document that brings a bridge between the two and says, okay, this is how it's going to be. We are going to ease you out into the real world of paying or of complying, making sure you're all meeting all the previously made waivers. There should be some document or some guidelines that should be available for startups, for investors, for even just general people or laymen or just people who are interested within the fintech space, to know that after we meet the sandbox requirements, after we have tested out our products, there is a procedure into easing into the main markets and standing on our own 2 feet. Jenny, would this suffice?
Yes, that's perfect, Adwoa. Thank you for these perspectives. And before we wrap up for lunch, I want to take the opportunity to ask
just
two final questions.
Sorry, Jenny, can you please wrap up in the next 2 minutes, because we are way behind time. We don't want to eat into the next session. So if you can wrap up within 2 minutes so that we can take the lunch break. Thank you.
Sure. I'd like to pose one final question, and I think just because I think it's very interesting, and I'll give Brian the voice for that final question, and it relates to financial education. I think financial education has come as a topic quite frequently in the course of this panel, and one of the things that we're perhaps not looking enough is how effective financial education is. I know Brian has, as part of his work with IPA, looked at the effectiveness of information campaigns, and I'll just turn over the word to him and maybe share a few of his findings and recommendations in that regard before we wrap up.
Thank you very much. I feel very much under pressure. I am not very good at summaries, but I'm going to try. So one of the key questions that we have been trying to answer is whether if we give consumers tips on how to distinguish between a legitimate communication from their provider and a fraudulent message, we will be able to increase or enhance their ability to do these distinctions. And we have tested through experimental work, we have tested this in Nigeria, we have tested this and it didn't work. We have tested this in Kenya, where we, again, got messages that financial providers typically share with, their customers, and also similar messages that fraudsters typically use. And then recruited a bunch of respondents, exposed them to these messages, and then after that exposure, we gave them tips on how to draw these distinctions, with the hope that will increase their ability to, distinguish between what a legitimate message is and what it is not. And so it's experimental. We have a group that receives these tips and a group that doesn't, and we compare the outcomes between these groups. And unfortunately, it didn't work. So giving tips to people and hoping that it will increase their ability to draw these distinctions apparently does not work. And this is the reason, because their overall caution levels increased. So every message that they received was categorized as fraudulent. Now, we don't want that. We don't want, our efforts for financial literacy to lead to consumers not receiving any form of formal communications from their providers. So caution levels increased, and their ability, which was our goal, to draw this distinction was not realized. Now, where have we seen this work better? So we have done this in Uganda, again, tweaked our approach a little bit. And what we have done now is to gamify our approach. Create, a game of sorts using interactive voice responses, as well as using metaphors that are, very akin to these communities, right? People understand these metaphors. And what we are seeing is increased engagement. And the early results that we are looking at, again, it's an experimental study. We're comparing people that receive this treatment with people that do not. We are seeing the people that will receive the treatment are less likely to be susceptible to fraud. So that is promising. That is what we are seeing that is working. And I think my final thought on this is, don't, just because something sounds good and you think it works elsewhere, don't just take it on. Test it out. Make sure that the solutions and the things that you're using actually work. So test and make sure that there's evidence that it works within the context that you're actually operating. So not copy and pasting, within that context, importantly. And then the final one is, these things are not easy. Or you can see in Nigeria, it didn't work. In Kenya, where we did it again, it didn't work. And it worked in Uganda because, again, we tweaked our approach and we got it to work a little bit better within that context. So it will take time to create this evidence, but you need to create the evidence so that you don't waste your resources using an approach that is non-functional, or an approach that leads you to outcomes that you did not intend, like people just shunning all messages from their providers. I will pause at that. I hope that was 2 minutes, but thank you very much for being a wonderful audience.
Thank you.
Thank you, Brian, and I hope that leaves everyone with some reflection points as you go into lunch and as you go into the final session of the panel today, of the conference today. Again, also from my end, many thanks, and wishing you the best of luck for the rest of the conference.
Thank you, Jenny. A round of applause for Jenny. Thank you so much for your patience. Now we have little time to eat lunch, you know that, so that we can come back and start the next session at exactly So where are ladies? I'll say something about this session. Please, if I forget, remind me when we come back. Please, our panelists, you may please take your seats. Thank you. Please, a round of applause for them. We're going for lunch. If you are here for breakfast, lunch is taking place at the same venue where we had breakfast. Now, if you were not here for breakfast, please, behind you, there is a lady in a shade of wine. Yeah. She would usher you to the place where we are having lunch. Please, let's do well to eat quickly so that we are back like 2:15 latest. I know. Yeah, let's try and be back as soon as possible for the next session. Thank you.